No, you guys are, you're straight in work.
Issues there, but we're good to go now.
So,
All right.
can
Should we take
say,
it away?
Yeah, take it away. Say, do your intro. You're Pat, right?
Oh, by Jove, I am tonight. At least I'm in the witness protection program. They move me around. Anyway, I'm Pat Walker, Mission Winners. We've got a team of people with us that know their stuff. We've got Owen, we've got Rich, we've got Cy, we've got Matt, and we're glad that you're here tonight. One of the things that's very important to me is I don't want to steal people's time. So, and nobody here does. So we're going to be very direct in what we talk about, but also, and this is for everybody, we are going to be very explicit and very specific on how to do this. What's happening right now? Let's be honest, everybody. The market's sloppy. I mean, here, I've got the chart of the spiders up. This is what you call a downtrend. I mean, look at it. It's below the 200-day. It's below the falling 50-day. By the way, the purple line's the 200-day. The green line is the 50-day. The blue moving average is the 21 exponential. And the yellow moving average you can see right here is the 8-period exponential. And I learned this years ago. If you want to know what the trend of the market is, take a picture of it, tape it on the wall, go to the other side of the room and look at it. That's your trend. And one of the best things we can do as good investors, don't argue with the trend. I am very serious about this. For those that don't know my story, I've been doing this since 1986. I managed money. I managed money through the crash of 87, not just ours, but a lot of other people. We were completely out, thanks to Martin Zweig, and continued on with this, managing money through Fidelity funds. And I got out of the business and hung it up in 2000 and became a private investor. And since 2000, we have, and I have a family of 6, we have lived off our investing profits, nothing else. And it was a pressure cooker. It was high stressed, but it was my choice. My wife stayed at home and raised 4 kids, and it was busy. You can probably guess. But in fact, my mom came over once and she says, "My, you have an active house." And it was, but it was great. But that's part of the reason why I'm so driven and so wired tight about finding good stocks and making money, because I had to. If not, I would have blown up and gotten out of this. So what are we doing tonight? I want to share this with you, and this is important. Again, most of the men that are in here have been doing this a long time. And as I said, I was there for the crash of 87 and everything else since. Supporting a family. There are a couple of clean and simple setups that we discuss all the time at Mission Winners, and we constantly show examples. They always say a picture's worth 1,000 words. What do we try to do? We try to show you 1,000 words. And we're going to look at some charts tonight, and I'm going to be very specific and explicit in my explanations so that when you walk away from here tonight, you know what I'm talking about and you can do it. That's our goal, is not just to give ideas, but explain why so that you can apply it. So here we go. We're looking at the chart of the spiders, and I need to share something with you. And most of you know this, but if you don't, we are coming into what is historically the best time of the year, the last quarter. And that's the biggest reason we're doing this webinar, is to get you prepared for it. I stated before, I'll tell you again, I've made my year in these 3 months. It's that good. Will it be this time? I don't know. Nobody knows the future, but historically it is. And we can use that to our benefit, that knowledge. So we're looking here at the spiders. And I explained the different moving averages. And you can see it had a really good trend up here. And this is a daily chart, by the way. And you can see it's been steadily dropping. Okay. And it's easy to see. It's in a downtrend. Don't argue with downtrends. Never, this is strong advice for everybody. Never impose your will on the stock on the chart. It doesn't know you. It doesn't know you exist. It's not a living entity. It's going to do what it's going to do. And all we can do is simply get in line with it. And if you can accept that and do it, you will be light years ahead of most people. Don't argue with the chart. The trend is down. But here's the exciting part, and that's the biggest reason we decided to do this webinar. The fourth quarter is historically one of the best quarters in the market. Is it going to be this time? I don't know, but from a historical precedent, it is. You can again make your year if you're prepared, and that's why we're doing this webinar, as I stated. So take a look at the chart, and I need to share this with you. It's the 200, as I said. The purple's the 200, the green's the 50, the blue is the 21 exponential, and the yellow is the 8-period exponential. This will really help you and your eyes. I have found a black background works best. It's higher resolution and these colors, and color code both the price bars and the corresponding volume bars. That way it's very easy for all of us to see the trends quickly. Green is good, red is bad. And take a look. You see all this red right here? And you see all this red right here? And all these red volume bars? They're selling it. They're selling it. What do we do with that? We stay away. We wait. We wait patiently. And I'm going to show you right here what we are waiting for. And it's really simple. At least it is after you've done it quite a few times and over years. Our goal at Mission Winners is to illustrate it so that you can apply it. We're in a definite downtrend here. Historically, as I stated, and I've made my year in 3 months, and you may be able to this time too. I'm not saying you will, but if this thing takes off like it normally does the last quarter, you'll do real well. And that's again why we did this webinar. So it's steadily dropping here. It hit a lower low yesterday. It started to lift a little bit today, but there's nothing here yet. Now I'm going to show you and illustrate the higher low setup. And it's simple. I used to teach statistics no, this isn't statistics. This is simple stuff. Right here, you see the low here? And again, this is a daily chart. It's easy. This low is higher than this low, right? See that low right there? This low is higher. Wait for that. Wait for that to happen. And it starts to lift. Now, this had a higher low here and then gave it back. This one was relevant right here. And here's a great telltale sign for you. Do you see this red bar right here? And I'll make this bigger for you. You see that red bar right there? It gapped down, it fell, and it reversed and closed near its highs on a pickup in volume. You have a higher low. This low is higher than this low. That can be a trigger to buy. The next day, it gaps up and it pushes through the 21 day. All right. That's a starting day. Okay. The next day, it gaps up and reverses down. But note this, and I'm going to explain the nuances in the charts for you, folks. You can say, okay, I can see that green bar, but bad. That's a bad bar. Look at it. Combine price and volume action when you're studying the chart. How was the selling volume on this bar versus the buying volume on this bar? It was less. It was less. You're okay. And then what's it do? I said this all the time I was an IBD meetup co-leader for over 12 years. Yeah, I've had lunch with Bill O'Neill a couple of times. So we're ingrained in this stuff. People talk with their mouths and vote with their pocketbooks. They voted here. There was a little bit of selling here, and then they voted again here. Good, strong price volume combined with good volume pickup. And it starts to lift. It pulls back on decreasing volume, and watch the trend. You see that 8-period exponential moving average? By the way, that 8-period exponential moving average isn't a mistake. A person who heavily influenced me on this was Ed Sakota. He uses the 5-period exponential moving average for commodities. We noodled with this for a long time. He really challenged me. It was great to meet him too. So if you don't know who Ed Sakota is, S-E-Y-K-O-T-A, look him up. Every time he'd ask me a question, he'd tilt his head back. I say something, he goes, "Why do you think that is, Pat?" He was great. Helped me be a better investor. But note the trend of the 8-period exponential moving average, the yellow line. That's what we're looking for, a higher low setup. Now I need to share something with you. And that's, again, the reason we're doing this webinar. This consistently happens the last quarter of the year, especially after you've had a big downtrend. And I don't know about you, but this kind of looks bad to me. Oh, and yeah, guess what? We're coming into the last quarter of the year. The date right here, we're coming right into the end of September. So here's one example that we will be ready for to buy. if we form a higher low. And again, that's why we're doing this webinar. So you can say, okay, Pat, that makes sense. Let's go back in time. This was a year ago. This is September. And look, that's a pretty hard fall on the market, folks, right? Fell here. The high on the spiders is 454, and it hit a low of 426. That's a pretty good drop there, folks, right? If you owned a bunch of stock through that decline, you got hurt. But then look what it does. It falls, and then it rallies, and then it falls again. And this low is higher than this low or this low. It is a higher low setup. And we bought this. We made videos on this. You see the pickup here? It gaps up, it falls and closes near the highs on a pickup in volume, and then it's off to the races. And again, folks, that can help make your year, the higher low setup. And I'm pointing it out again, slowly. This low is higher than this low.
Can I ask you a quick question, Pat?
Hit me, buddy.
This is from Samuel on YouTube.
Okay.
He wants to know, how do you decide what lows are relevant in the higher low? Go ahead. That's
Good
it.
question. Go ahead. I'm sorry.
No, that was it. That was the question.
Yeah. What low is relevant? The lowest low. And I'm not saying that. By the way, team, I take this very seriously. Through the years, I've had people say, I couldn't work with you because you're so driven. I take this really seriously, and I want to be specific when I explain things. It's the lowest low in the chart that you'll see.
In the drop, right? The lowest in the drop when it starts dropping, and then if it goes back up and there's another drop, those two
and you get another lower low.
Right.
You get the lower low. By the way, do you see this right here? Right here? This is just a low. Right here, this is just a low. We don't want to play. This is a great question, by the way. We don't invest off the low. We invest off the higher low. We're not buying down here. We don't pick lows, okay? That to me is an ego game. And if you have a big ego, the market will have a lot of ways to whittle down your ego. So it falls, it rallies, it hits another low. And then it rallies, and then it falls. And this low is higher than these lows right here. And look what it does. Gaps up, falls, and closes near the highs. You think we're the only people in the world that know about this? So here it is. It's like, yeah, I guess there's some pent-up demand. There's a higher low here. Maybe it's going to go. You want to know how much pent-up demand there was? That sucker gaps up the next day. Look at this. People saw it and did it. I think, to be quite honest, I think we did too, if I went back and looked at our accounts. And the higher low setup. Look at the March. And when is it? It's the last quarter of the year, folks, after a big decline. There it is. That can make your year. You can say, well, okay, Pat, you gave me 2 examples. We're not done yet. Why do I do this? To help people.
On the higher low, Samuel has a follow-up question. Do you enter the following day or on the close of the higher low?
Good question. Either day that looks really strong. You could either do it on the bottom day, and this is a perfect question, and Samuel and I didn't rehearse this. We didn't enter on this day. And why not? Because look, it gapped down, it fell, and it closed below where it opened. So you wait the next day or the following day when volume starts to come into it. Please know this, by the way, you're not going to pick the bottom. That's an ego deal. We're not buying at the bottom. We're buying when there's confirmation to buy. Right here, not a lot of confirmation, but on this bar, it started to pick up. Look, it gapped up and it closed up on a pickup in volume. Wait for that. And remember, we're not day trading. We're not looking at 5-minute charts. All my decisions on all this primarily made on the daily charts. That's it. But again, note this, folks, I have to show you this. Look at September. Look at September in 2020. It's like, my gosh, that's a drop. That'd kill you. This is awful. And then it goes up and then it falls. And what do you have? You have a higher low in the last quarter of the year, October, right? Here it is, October 30th, and it takes off. And again, look at the March. from buying in here all the way up to here. That can make your year, folks. There you go. You could sell some and it marched, and then finally it rolls down here and gets sloppy, and you can take the rest. So now I've given you 3 examples. Let's go, or 2, excuse me. I'm sorry. You can say, okay, Pat, summarize all this for me. And I want to do that for you. This is a very, very reliable tactic, especially after a good decline coming into the last quarter of the year. Remember this, all these money managers and everything, their bonuses are based on their performance. What do you think they want to do near the end of the year? They want to lift that market up, right? I need to temper it with this statement. This doesn't work every time. Nothing works every time. And you can say, what kind of a crock is that? Bill O'Neill, if everything he ever did worked every time, why would he have a loss rule of 7 or 8%? You always control risk. But this is like a cup and a handle. This is an extremely reliable setup. And there it worked again. So you can say, okay, Pat, there's 2 examples. All right, well, let's keep on going. We'll build a case. Sliding back in time. The market lifts in September, and then it falls into October. Okay. Oh, let me think. We're kind of getting close to October now, aren't we? Oh gosh, we are, the last quarter. And that's why we're doing this webinar tonight. By the way, the people that are helping here are great. Cy, Matt, these folks, they're awesome. They know their stuff. Rich, Owen. So here we go. The market rallies up, and then it falls, drops down, gaps down. The next day, it gaps and reverses and closes up. That's just the bottom. And then it rallies up, and then it falls. And what do you have here? This low is higher than this low. And it starts to lift, okay? The volume wasn't heavy, but you see this bar here, and the next bar, it starts to take that out. That can be a buy trigger. And here's the beautiful part about this tactic. You could say, okay, Pat, so you buy there. Yeah, I guess that worked pretty good, didn't it? Look at the trend. Let's talk the other side of the coin. What if it doesn't work? Where do you sell? And this is the beautiful part. If it takes out the lows of this bar or this bar, you sell it for an extremely small loss. You're not day trading. You're not looking at 5-minute charts. All you're doing is look at the daily chart. That's it. And let it trend. Let it work. And work. And work. I'll shrink this for you. At a higher low setup from up here, right in here, we'll call it 295. 295 all the way up to, and you're not going to sell at the top, but 295 up to over 300 and something. That's good. 330. That's good money. Pulls back to the 50-day. And here's another lesson for you. And by the way, yes, I know these charts. I've looked at these things a million times. Where did this stop going down? On the 50-day. Isn't that neat? Everybody knows about the 50-day. And then it launches again. And then it rallies. And then when it starts to roll over on a pickup in volume, I'm going to slide this over so you can see this. It starts to drop. Look, it goes up on very low volume. It falls on a pickup in volume. It falls further on a pickup in volume. You see that bar? And then it loses the 21-day and the 50-day on a pickup. There's your triggers to sell it. You're done. And you made great money. So now I've shown you either 3 or 4 examples. The last quarter of the year. Oh, and that's all the farther this data goes. But you can see the case. 4 examples. After the market's made a good run, this is now, okay? This is current. This is as of today. After it's made a good run, it makes a decline. And this is today. Perhaps it will form. It will go up. This is the best thing it could do. This is the spiders, by the way, which to me is a great proxy for the market. It rallies up, it falls, and it puts in a higher low where, and I'm going to be very specific for you, and I don't know when it's going to do it, okay? But here's the low. It rallies up, and it falls and it puts in a higher low. And if it does that, folks, we're in the fourth quarter of the year. This is when all the managers try to get their dang bonuses and they try to push things up. Go back and study history. Look at the charts. You can say, by Jove, the fourth quarter is normally pretty dang good. Now, me telling you that is not an opinion. That's a fact. Now, you all know that. Everybody knows that. Can it not, therefore, to a degree, become a self-fulfilling prophecy that people will plow into it? Yeah. Am I saying they're going to? No. But we stack the deck in our favor and we look for this over and over. After a good run, again, look what it did into the fourth quarter. It makes the run and it goes. And that is serious, serious money over and over. That's 2022. And I'll go back again just to drive home the point. The market had a good decline in 2021, rallies, then it falls again, okay? And it starts to lift, it rallies up, and it pulls back. And this low was higher than that low. It's a higher low coming into the fourth quarter of the year. And that's a good run, folks. That's a huge run right there in a relatively short period of time. So again, the reason we did this webinar is to illustrate this and say, be ready. Be ready. We've got a low in. Here's today. We have a low. As I stated, I would love it to rally up, pull back, form a higher low. And you can say, Pat, what investing tool should I use? You could use the spiders, but I like a little bit more leverage. I use SSO. I love SSO and I love QLD. Those two. They're big. Picture this. You own the S&P 500 with 2-for-1 leveraged. Or with QLD, you own the NASDAQ 100 with 2-for-1 leverage. But you could say, oh, that's aggressive. It's leverage. It's leverage. Put it in context. You don't own one stock. You own 100 stocks. And what stocks do you own? You own Apple, Amazon, Google, Microsoft, Twitter, Tesla, all these big names. You own them with 2-for-1 leverage. And that can really make a rocket ship move in the markets. And again, the beautiful part is this. We're coming in right now. Today's September 28th. What are we coming into, folks? We're coming into the fourth quarter. Will it happen? I don't know. Historically, it does. And I'll restate it. The reason that we wanted to do this webinar now was to get you prepared for it. And Mission Winners, we've been doing this I've been doing this long before we had Mission Winners. It works. It works. And here's the beautiful part about it also. We can go back in time. If it doesn't work, I'm going to go back to last. Right here is the higher low. Folks, the date on this is October 13th, okay? We're approaching the last quarter of the year, right? The higher low sets up. So you can say, okay, if I buy here, Pat, all right? A lot of people always talk about the good side. At Mission Winners, we are big on risk control. Very big. Let's suppose we bought here or added here, but we'll say we bought here. It's a higher low setup on a pickup in volume. If it doesn't work out, where do you sell? Taking out the lows here? No, taking out the lows here. I just showed you four examples, and I could show you more during the year that this works. Your risk control is extremely tight. If it takes out the lows of the trigger bar, you sell it for a very small loss. And all these runs that I just showed you, by the way, I never looked at 5 and 10-minute charts. I was keen off the daily charts. Fine tune it maybe down to hourly or 30-minute for volume surges and let it work. But again, you're buying here. Folks, I'll say you bought it for $440. I'll round up, okay? $440 all the way up. Now, you're not going to sell at the top up here at $473. But let's suppose you sell it for $470. $440 to $470. That's serious money in a short period of time. And how much risk did you have? The dang thing's trending up the 8-day moving average. You're fine. You've got cushion that you're going to let it work and breathe. Starts to lose the moving averages, you could sell some. Keeps losing them, you can sell the rest and lock it in. Done. That's, again, why we wanted to do this webinar tonight. It works. It works. And by the way, it works not only the last quarter of the year, it can work during other periods of the year too, and work extremely well to make money. So anyway, and I could show, I don't know if you want, Owen and Rich, I don't know if you want me to show you a couple examples from this summer, the higher low setup to drive home the point, but I will if you guys would like me to.
Would you mind answering a couple questions real fast?
Well, sure. Don't ask me who my barber is.
All right.
That ain't gonna work. Hit me with it.
There are several. Let's see what we can look at. Here's one that you might be able to answer. Did Bill O'Neill buy breakouts in bear markets, or did he have a different buy method in a bear versus a bull?
Basically, he didn't buy. He didn't buy. He waited, which I admire and respect that discipline. When the market's bad, the market's bigger than all of us combined. When the market's bad, I don't do anything. I don't, and it's not that I'm lazy. I'm not. I've had people say I couldn't work with you because you're so driven. It's just that I don't want to argue with it. It's bigger than all of us combined. All I want to do is get in line with it. And if it doesn't have clean and simple, high probability breakout entries, I don't do it. It's that simple. However, there's opportunities even on shorter time frames if a person's interested in getting involved too. And that's a whole different realm that we can discuss. So, but we're not going to get wrapped up into that tonight. But no, I won't argue with it. It's bigger than all of us combined. And all I want to do is ride the pony. And if the pony ain't going the right way, I'm not on it.
So Bill O'Neill just would basically sit on his hands and be patient.
Yep. And by the way, you could say, oh, you know, I've had lunch with the guy and he is one of my heroes. What a kind man. What a kind man. I've been with him a couple of times. So, and I'll share this with you all. Credit where credit's due. Bill O'Neill changed my life. I'll just tell you that. He really did. If you haven't read it, and this is for everybody, if you have not read the book, and I don't work for them and I get nothing from them, okay, please know this. This is completely an objective statement. If you want to dramatically improve your investing knowledge and results, buy the book, How to Read Money and Stocks by Bill O'Neill, and read it. And don't read it just like a book, study it. I have all the copies here. I've got the first edition, and I've read that book and studied it 20 or 30 times. Every time a new edition comes out, I buy it and I read it and study it like a textbook. I have notes in the margins. My philosophy is this. This is a serious business. And you know why it's so serious? We're talking about your money. I mean, I don't know about you. That's close to the heart, right? So why not take the initiative, which we do, and I encourage you to also, and I'm sure many of you do. Study it and apply it. Also leads to another important point. Strive, if you can, to turn off all the noise out there, because it can just really confuse you. And run your race. Don't get caught up in the compare game, because from a psychological perspective, it's counterproductive. That's fact. Just, wanted to share that with you.
Greg says from YouTube, there's a big warning in red border on page 151 of Bill's book. It includes this. You absolutely do not need to buy breakouts during a bear market. Most of them will fail.
Yep. And that's why we've been laying low. However, I will tell you this. Our research, even in a crummy market, we have had stocks that have made really good moves. And I'm getting off on a tangent here, but this is relevant to that question in that statement. If you focus, and I've got the documentation on it, if you focus on stocks in the top 40 groups that have either great earnings, 40% or higher, or average sales growth of 40% or higher, and they are, again, leading groups, and they have a composite rating of 90 or higher, preferably the 95 or higher, you can make really good money. This is us. Folks, look at the, here we go. Hold on. This is pretty choppy market here, ain't it? This is pretty sloppy, right? Here's a stock in a leading group. TNK, entry right there. Volume pickup, clean and simple base, leading stock in a leading group. And that's a pretty darn good move right there. That's one we did. If you're in the leading stocks and leading groups, you can find winners, but I must stress, you've got to control risk and make sure that it is truly a leading stock in a leading group and it has great earnings, and I'll quantify it. Earnings up 40% or higher, or average sales up 40% or higher. And a composite rating, preferably a 90 or 95 or higher. If you do that, you can make money even in crummy markets. Right here, the market was crummy. I'll show you one. See that clean and simple base breakout? You see that gap up? We bought this on a 10-minute chart, and I made videos on this that you can go look at, folks, if you want. Our entry was right in here, all right? You say you bought it for 234, 235. In a crummy market, this thing ran up almost 100 points from where we bought it. Now, we didn't sell at the top, but you can find them. But you must be extremely stringent in what you're looking for. So I'm going to synopsize this for you to help you. If you can focus on stocks, and you might want to write this down, focus on stocks in the top 40 groups. Focus on stocks that last quarter's earnings were up 40% or higher, or the average sales for 2 quarters was 40% or higher. Focus on stocks with a composite rating of 90 or higher and an accumulation distribution of A or B in the top 40 groups. If you take those constraints that I just gave you, you can find stocks like this. That's, folks, that's good money right there. And yeah, this was on the key list and it was bought. I got off on a tangent, but I wanted to share those constraints with you. And if you have a question, contact us at Mission Winners. We've got videos on this. We've probably made, Owen, how many minute videos have we made? Probably over 1,000?
I counted them
over the
last
years?
night. I think it was 12,142. I had to individually count them.
Oh, there you go. That took you like probably about a minute and a half.
So that's what you were doing last night.
Yeah, that's
I
what
wondered
was
when
doing.
I sent you emails and didn't get a response.
Yeah, I was
There
counting videos.
No, there's tremendous education out there that we produce, and it's statistically valid. All right. I can quantify. They work. And here's the beautiful part. And again, I was an IBD meetup co-leader for 12 years. A clean and simple base breakout will give you a clean and simple exit if it fails for a much smaller loss. And that really does work. I know I'm getting off on a little tangent there, but right there, it works over and over. It works and works extremely well. And we use it. Anyway, I got off on a tangent because we're talking about the higher low setup. I want to synopsize this for you all. I want to say it again. We're coming into the last quarter of the year. We've had a pretty good decline. Historically, the last quarter of the year, you get a higher low setup and you get a good March. It works. And the higher low setup right here, you see that higher low? We did that one and it worked great. You want to see another one? Excuse me. Higher low setup right here. This low higher than this low. And we did that and it worked. Tesla, higher low setup. You see, by the way, it's always in that first part of July, higher low setup. This low higher than this low. And it worked. And it was on the key list. Over and over, it works. Higher low setup. This low higher than this low. Buys. 3 buys. So you got 3 buys in here. We'll say around 115. 115 up to near 140. Now you're not going to sell at the top, but that's good money with no hassle. The higher low setup works with stocks too. But we're going back here and saying, wait for this. Here's the higher low. And if this happens, the best thing could happen, this goes up for a week, pulls back, and it does it. And we have a higher low where the low here is higher than this. That could be a wonderful setup to the end of the year. Now I'm going to flip the coin and say, okay, Pat, that's all really great. What happens if it doesn't work out? Where do you sell it? Here's a beautiful part. It does that. When it takes out the lows of the trigger bar, sell at least half your shares. 7 or 8% losses? No way. You're probably talking 1 or 2% loss maximum. That's it. Control risk. We're really big on risk control at Mission Winners. Clean and simple base breakouts give clean and simple exits for very small losses. So, and we've got veterans in here, VIPs. They know, they've done it, and they know, two great guys that are what we're talking about. So I can take more questions, or Matt and Si can talk. Whatever is good, we can sure do.
All right, I'll get Matt and Si to talk right after you answer this very simple, basic question from Danny. What's the biggest mistake that you made that made you a better trader?
Wow,
That's
a great question. Actually, I've made so many, I don't know where to start. No. How much time do we have? No. All kidding aside, it was a real pressure cooker for me, folks. I'll say this. My dad died when I was young. I didn't have any wealthy relatives. And I was the sole supporter of a family of 6. And I had to make money. My wife stayed at home. She was a stay-at-home mom. And so I had to make it happen. The biggest mistakes that I made, and this is the honest to God truth, the biggest mistakes I made, it was not limiting losses. I limited losses because it was a darn pressure cooker. I couldn't have any big losses because it would have blown me out of it would have wrecked my family. And I couldn't do that. I couldn't look them in the eyes and do that. But the biggest mistake I made, and I still remember it, selling too soon. It's like, man, I got a great profit. This is great. You can do Microsoft, oh, it breaks out here. Wow, this is pretty good. Oh man, that's huge. I'm locking it in right here. And it keeps going higher. And I could never find a way to get back in it. It drove me, I lost sleep over it. I'm like, I sabotaged myself. So the biggest mistake, I'm going to be very pointed, was selling all of my stock too soon and not finding, and it would keep going up in price. And I couldn't find a way to get back in it. And I bet money as I say that, a good portion of you are listening going, hi, Joe, I know right what he's talking about. It eats you up alive. Every day you look at it and it keeps on going up and you don't get in it. You can't get in it. You're locked out. And then you know what's even worse? You capitulate and buy it, and then it turns and drops and you go, I don't believe this. I just sabotaged myself. So to be very pointed, this is it. Selling all my shares too soon. From a psychological perspective, and it's one of my degrees, if you want to minimize psychological stress, one of the best things that you can do, and this works, and we do this at Mission Winners, sell 20% of your shares. By so doing, you're guaranteed yourself a profit. The rest of your shares could fall back down to break even. You could sell the rest for break even, but you still made money. It relieves that pressure, it relieves that stress, and allows you to let those other shares run much further. And one of the best things you can do on a strong trend, watch, this is the 8-period exponential moving average, folks. And I said, who influenced me on that? Ed Sakota, who uses the 5-period exponential. And a good buddy of mine who is probably listening to this, we did a lot of this 8-period exponential moving average. We were using this before anybody else I knew. You can say, how long did it take you to get there? It took about a year and a half of hard work to finally determine that. We experienced with the 5-period, the 6, the 7, the 8, the 9, the 10, the 12, all of them. And we found out this was, and then later on, other people, started using it. But that's it. That's it. Don't sell. Biggest mistake. Don't sell all your shares. Let some work for you. There's a tension inside of us. Psychological tension. What can we do to relieve that tension? Sell some. Sell 20%. Knowing that if the rest of those shares come back down to your break-even price, you sell the rest for break-even, you still made money. You're in the driver's seat. But if they keep going up in price, you're still in it, riding it. Continues, and it gets extended a little bit and starts to get whippy on you, sell another 20%. There's a maxim on Wall Street that says this: You'll never go broke taking a profit. Folks, I got to be honest, that's an outright lie. If your losses are bigger than your profits, you'll go broke. So ride shares as long as you can. Not all of them, but some of them, and you will do much better. And that's from a guy who broke the rules, and it used to eat me up alive when I'd look at the stock every day and go, God, I can't find a way to get back in that animal. It was like, Pat, you just wrecked yourself and your family. They're counting on you. So it works. It really helps you. And I'll say it again, trends pay on the 21-day and the 8-period exponential moving average, which is the yellow line. Love it. Love it. Another point I'll make too, tied in with this, I encourage you, turn off all the news sources that are bombarding us all the time. Folks, I'll be honest. You listen to what's going on in Washington, D.C. Oh, it's the end of the world. Every day is the end of the world. Okay. It clouds your judgment. It clouds your thinking. I'm not saying don't be ignorant of it, but during the day, try to stay away from it. Focus on this, clear thinking. A confused mind always, this is a great quote, and I have a degree in psychology. A confused mind always says no. Don't inundate it with things that cause you to lose track. It will really help you. That's a fact. So, okay, we can do some more questions or Cy and Manny.
Yeah, I would like Cy or Matt to answer this particular question. I know just so they get a perspective of what our veterans have picked up here at Mission Winners and such. So whichever one of you would like to answer. Do you change your buying tactics during weak markets? Pyramiding into positions has been difficult when the market is bad. By the time I'm into a full position, the stock often reverses and goes down. So, what do you guys think?
Say the last part of the question, Rich. By
the time I'm into a full position, the stock often reverses and goes down. Now it sounds like he's pyramiding into positions during, no matter what the market's like.
The problem that I think he's encountering is when you pyramid, it depends on how you're pyramiding up, and then you may keep increasing your average cost high. Because of that, when it drops very quickly, you're getting into you near your price, and then anything further you're going to be in the loss. So you try to set it off. So you need to look at first of all, during a bear market, if you're trying to go long, assuming everything else looks good, like for example, the one that the tank or the few stocks that Pat was showing, even though the market was really bad, there are few that were still moving against the wind, right, against the headwind. So they were still going across. So in a situation like that, you don't want to be going with a full size. You may want to reduce. Like if you see Pat, he won't be always going with a 50, even though the pyramid is 50, 30, 20, he'll start with a 20. So in a situation like that, you may want to reduce a position and see how it works for you before you add more positions or go with a higher size. So if you very quickly add into the pyramid without really giving it room, and it's hard to give room in a market like this because within 2-3 days, the stock probably drops down. So it's if you're trying to keep trading in a really bad environment, bad market, these are very common problems. So you want to look at going with a size that you're comfortable with. Even if it drops, you're able to sleep that night. You're not like going to bed really worried about the position, and it's okay for the profit to be less. You're just dipping your toes there, right? It's a bear market. You're not trying to go and win the day. So that's just my 2 points. Go ahead, Matt. You want to add something?
you pretty much covered it all, Cy. Basically, and the biggest things I picked out of there that I would have said exactly the same is that you're probably pyramiding too fast.
Exactly.
Given the market that we're in, if you're in 100% position by the end of the day, in a drop down of maybe in the 20% range of the overall market, we're in a bear market, you're probably too aggressive in the environment that we're in.
Yeah.
And looking back at how I used to pyramid, if at all, in a bear market, I would wait for a whole nother setup. I'd buy initially, and then I'd let that whole position work itself out into another pattern. I would not add into anything else, set my stop losses a little looser, and wait for another pattern to present itself. If there was never a pattern, I would be in a quarter position the whole time. I would have never added. And it could easily go the other way against you. So at the same time, you're keeping your edge on you, but you're gaining the muscle memory behind it when the market does rip. So, yeah, that's probably just my little 10 cents about it.
Yeah,
I
one
just-
thing I want to add before we switch on to a different topic is, in a market like this, one option is don't sweat. Use your build your mental capital, go back to reading and doing things, and then observe the market. You don't have to be trading. There are times when you can really swing, and there are times when you can watch and observe and learn. That's one way, right? Other way, you're a short-term trader. You cannot sit to rest. You cannot watch something move. You still want to trade it. You could trade it in a way that you are starting with a 30% position size or something like that, not your full size, normal size, 20%, 30% off your position size. And then when it goes 1 and 2 hours off your risk, take some off. Take a 50% off, 30% off, and
Yeah.
then bring your stop, break the stop to break even, and then let it trend and let it go form another higher low, and then now you are moving your stop below that, and then you could add a little position to it, pyramid into it, when it again resumes its trend. So that way you are not very quickly averaging up and resulting in a chaotic situation. That's just
I need to interject here just a little bit for everybody. I want everybody to know this. These two men that are talking, they are veteran VIPs, and they are both consistently successful and profitable. They do a really good job. And honest to God, I'm not lying to you. If they didn't, they wouldn't be here. I won't lie. They both do a really good job. And so I don't want you to think like, oh, we just picked a couple people. No, these men, I've known these guys. They know what they're doing. So please, I'm asking you, listen, heed what they say. They're the voice of experience. So I thank you both for contributing on this also. I appreciate it.
Thanks, Pat.
Yeah, well, thanks for having us.
Yeah, absolutely. All right, Rich, do we have anything else?
Yes, we have a few more questions. More than a few. I have to just pick out some things. I really let me ask one quick question to Pat real fast, because this is directly at Pat. There's a
Sure.
couple actually that's directly at Pat. But what is the best advice that Bill O'Neill gave you, Pat?
That
That's
is a great. Go ahead. You were going to say something, Rich?
That's it.
I'm sorry.
That's
That's
one.
it.
I figured you'd like it.
He was he's such a nice guy. And again, we just sat there and talked. And the biggest takeaway I got was waiting for that right setup. Don't feel, I used to say this I was an IBD meetup co-leader for 12 years. And I said this every month on the stage. Just because the market's open for business doesn't mean you have to do business. Have the patience to wait for the right setups. I said this a lot too, and I say this in Mission Winners. What you're looking at right here, folks, this can quickly become a video slot machine and suck you in. And his point was just wait for it, and then swing. And if it's really good and the market's good, swing and swing hard. Keep buying more of it. Rules of proper pyramiding. We'll look into all that. That would be it. That would be it. And I'll tell you this. I've said this to everybody. I probably said it at previous webinars. That man changed my life. I will tell you that right now. One of the greatest honors I have was sitting down and talking with him one-on-one. I still remember one time I met him. He goes, "Hey, how you doing?" After we'd met one other time. There was one time I was in Houston. Y'all will love this. I'm at a Cancelim level 3 in Houston. I went down there and I get on the elevator in the hotel and there's just two guys there. You know, when you get on the elevator, you just kind of push the button. And it was Bill O'Neill and David Ryan. So we had a nice talk on the ride down. It was pretty cool. So yeah, that's it. That's it. Just his book, like I said, The Man Changed My Life.
In the higher low setup, how many days do you leave in between the lower low and higher low, max or minimum? They're trying to get like an estimation of how many days
Good.
you should be looking for.
Great question. I prefer at least a week, and I want it to be able to be seen not just by me, but by other people. And that's why I like a week. I don't want it to be like right here because, oh, yeah, that's a higher low. It's 2 days difference. It's too close. I want a little more space there. And again, I like a little time in it, which naturally by default needs space. It increases the probability that other people see it too, and it works. Oh, by the way, I've got to show you another one. So this works pretty good. I'll show you one from a year ago. This one happened when I was in Memphis. First, there was one here on NVIDIA. Check this out. Talk about a higher low. This low was higher than everybody can see it. Look, I mean, it's vanilla. And it lifts trigger bar here on volume. And that, they all don't do this. But you know, you talk 210 up to 330. That's serious money in, what are we talking about? 1, 2, 3, 4, 5 weeks. There you go. And that was on the key list. And we had VIPs in there loaded on it. That's it. So the moral here is this, at least a week. And make sure when you're doing it, always be very pragmatic. Ask yourself, would other people see this? Is this something that's really easy to see? Clean and simple. It's like a clean and simple flat base breakout. Can everybody see it? Can everybody see this? It increases the probabilities that they'll buy also. And when it starts to lift, look for some volume confirmation. Look at the volume pickup on this bar right here, folks. I'll make this bigger for you. See that? Look at the volume pickup. On this bar, it did volume of 18 million shares. On this bar, it did 24.3 million shares. A nice steady pickup. Off to the races. And note, I talked about the 8-period exponential. Look at the trend up the 8. It's a thing. You don't have to do any work. So anyway, I wanted to elaborate a little bit more on that, just to be really specific, and give people a little bit more than just a question and answer. So good.
So the one that Pat just showed right there in the chart, but that is not just a higher low. There's a lot happening there. There's a downtrend line that is there, and then you have the moving average crossover. You have a bunch of moving averages right below the support, a lot, and that definitely has a lot more eyes than also that's one of the heavily traded stock. That's our maxlist stock.
Yep.
Heavily traded, highly institutional stock. So a lot of eyes, and right there, excellent setup. Never to miss a setup. That's the
that was a game changer. Good eyesight, yes.
Yeah, you want to look
And
for
again, that was on the
what
key.
else can complement that higher low, not just higher low. Is there other things that can complement, other things that can give me a better risk reward? All that can add more conviction to the trade. The way you can start at 50 rather than starting at 20, right? You know, how do you pyramid into the way you can get more out of that?
You stack the deck in your favor, as you stated, with those moving averages, that cluster of moving averages right
Exactly.
there. And you know what's neat inside, you're alluding to it too. You know, folks, y'all know about the 50-day. Dang near everybody knows about the 21-day. You got them all intersecting together right in here. That's beautiful. And it's just off to the races. There you go. Good points.
Matt, could you answer this one for me? How do you minimize entering into a false breakout?
I love this question. This is a good question. The best way I found it, and it kind of ties back to some of the biggest mistakes you've ever done. And I actually I look over here on my other monitor, and as a reference, I have the top 4 largest mistakes I've ever done, constantly looking me in the eyes. So without avoiding false breakouts, don't be trading in a bear market is probably the best way to eliminate any false breakouts. It's easier said than done. You always think you need to be in the market.
Yeah.
And it takes some time to be able to pull yourself out of there and really break free from that. But once you do, you realize that the market's not going anywhere. It's always going to present itself. It's always going to have opportunities. Um, there's no reason to try to fight the overwhelming tailwind behind you. At least I found that in my personal experience to be the best case for avoiding false breakouts. That is the best scenario. Is just completely remove myself from the situation. And to give you an idea, I probably have made 6 or 7 trades in the last month and a half, or maybe more. I have barely traded whatsoever. Basically, since the gap down on the 22nd is in the SPY, is basically when I was out. And there was no reason for me to even play around with that.
Yep.
A lot of people reached out to me on Twitter and asked me what I was shorting. At any point in time, the weather is getting kind of chilly where I'm from. So there's only a handful more weeks to get some golf in. So the whole period, I'm not even watching stocks for the most part. If you are destined to get in the stock market, you have to scratch that itch. There's no way to avoid a false breakout, right? You never know that it's going to work out, or you just never know. So you can't fully avoid a false breakout unless you're completely out of the market. I mean, it's just common for false breakouts to happen in this market, and it can happen in a great market. You can get, a tail bar on the day you buy it. You just can't avoid it. You just have to make sure you're accounting for the worst case scenario in the event that happens. That's the best way to protect yourself. So
Good
2
points.
parts, I guess.
I think, Matt, what you said too, there's complementing your statement. A lot of people have this misconception that, oh yeah, these, the professionals, man, they're always doing things. No, we do it when it's right. And if it means doing nothing, that's okay. It's not that we're lazy. It's just that we try to stack the deck in our favor as best we can. And sometimes the best thing to do is nothing. It's like Matt's saying, just sit tight and wait. It'll happen. I'm excited for this fourth quarter. I'll tell you this. If this thing does what it normally does, this could be really, really good. Is it going to? I don't know the future. Nobody does. That's, by the way, this is a piece of advice for everybody. Anytime you meet anybody who says, this is what's going to happen, run away. Nobody knows the future. When you can accept that reality, your thought processes and decision making will be much better. Just accept what else. Great quote from David Landry, who I had this taped to my monitor for over 20 years. I'll believe in what I see and not in what I believe. I'll say it again. I'll believe in what I see and not in what I believe. Get in line with what's happening, not what you think should happen. And it'll help you. It complements the points that Matt was making. Don't argue with it.
It'll avoid a lot of whipsaw action with your pocketbook and your emotions.
Oh, yeah.
It'll take out both. And just being out of the market you think you want to be in it all the time and make some money, but like Pat is right, it can turn on a dime, especially in the last quarter. So I'm ready to get in, and I'm ready to get in heavy if the right opportunities present itself. But if they never change, I'm going right back to the golf course for another couple weeks
you
before we
go.
get snow.
Yeah.
So that's my game plan.
I like that.
Okay, so Jimmy Cow, I believe that's how you would say his name. Have any of you all done this technical style trading while having a W-2 job as the primary? Or do you all have to do this full time in order to succeed? Thanks and great information, by the way. We do have a lot of VIPs that do have full time jobs outside of and we set up our Discord so you can get our VIPs can get their alerts on their phone while they're out and about. They don't have to be stuck to their computer all day long. Any of you guys have other jobs, Sai?
Yeah, I do. I work full time. I lost my video, but it's okay. Yeah, so I'm fully employed. I mean, I've been doing this trading since 2017, and then CanSlim since 2020. Starting with Mission Winner Service. But yeah, I've been employed for like 30 years now. So I'm in a higher position, manage people, and
Good.
work with customers all the time. So it gets hard sometimes. I would do all the legwork to look at all the charts and go through the key list. I may do some other scans, identify them, mark them, share it with the members. But then the next day the trade starts, I'm in a customer call. I cannot even look at the market. So it happens. And then there are times where I'm not a big buy stop kind of a person. Means I need to see it. I want to see the action to have the conviction to buy into a position. So I don't put buy stops. And there are days where I miss it, and it is what it is, right? That's what pays us the bill is the full-time employment, and trading is something that for me it's something that I wanted to be able to manage money by myself. I don't necessarily want to be having that handed over to somebody else. So, and I want this to be a skill. I'm not trying to get rich with trading, just learning for a short while and looking at where is my P&L. That's not what my focus is. My focus is long term. Do this, learn this right. Don't look for scalping and making dollar here and there. Try to learn it right. And then make that as a something that you could do. After 60, I could retire and then just focus on this. Right. By the time I'm pretty good at what to look for, how to trade it, how to learn what not to do, and learn what to do and focus on those. So that's where I want to go. So the answer is yes, I do work full time.
I need to interject here. Sai said something really important. I mean, really important. Don't look at your profit and loss during the day. Don't get wrapped up in that. Focus on clear decision making and risk management, but don't get wrapped up looking at that because it will cloud your judgment. If you're having a really good day, you go, man, I'm going to town. I can take a little bit more risk. Don't do that. Or, gosh, I'm losing quite a bit. Man, I guess I should just go. I'm in the dumps. Oh, there's something breaking out. No, I'll probably lose on that. No, I won't do it. It's a great point, Si. Stay away from looking at that profit and loss. I'm not saying be ignorant of it, but during the trading day, stay away from that. It clouds your judgment. I know because I've been there. So
Yeah.
That's a good point you made there.
Thanks, Pat. Hope that answers the question.
Yeah, that was a good answer. Danny says, do you prefer buying in the morning on an opening range breakout, or do you wait for near the closing hour to see more of the day's volume? Hard in the morning to assess if it's not going to have a pickup in volume. What do you think?
Well, again, Pat can give a better answer. My answer to that is, you don't need to be pressing the buy button at 9. If you're Eastern time at 9:31. You have your key list. You have few stocks that are marked, and that's what you're focusing on. 5, 6, 8, whatever that number is. Hope it's not 30. So you have a limited number of stocks you're focused on. You're watching them, and then have your chart layout in a way that you have your daily, you have your 30 and a 10, at least the first hour. And then as you're just focusing on those, and then you need to have some way of knowing which one's green off your key list versus red. Those that are green, you marked. Start watching those in the intraday time, the 10 and 30 and a daily. Keep them all in the one screen and watch them. And that you should see the volume coming up in 10 as soon as the market opens. There may be a few that shows volume in 10, and then soon you'll also start seeing the volume in 30. So within the 10 minutes, 15 minutes, that kind of tells you which one's moving. As long as the market trend is good, you're not in a bear market, you're not in a deep correction, those are okay. And after 15 minutes, 10 minutes, you look like the volume is pretty good, solid coming in. You have a limited risk, go ahead and pull the trigger. So that's you don't have to wait for a sophisticated way of calculating. Can Slim says it should be 40% or 30% above the 50-day volume, and how do I figure it out? Do I need to do some kind of a calculation to do that, right? Just look at even before you put all those in your keyless stocks for watching for the day. Look at what's the volume pattern, how the volume has been. Is it in a tight pattern? The volume has been drying up, versus you see a lot of red bars and the chart is wide and loose. So, again, you have done all the legwork. You've chosen a few specific stocks. You watch the intraday volume after the market opens, and then be able to make the decision. That's my answer.
And I interpreted the question along the lines of, is it better to open a position during the morning period or in the afternoon? That's how I interpreted the question. And truth be told, I don't like to keep track of the time period of when I enter in a position. I'm sure it's a good measure to keep on you. I know there's a lot of back testing behind entering a position overnight. It's really reliable. I'd prefer a breakout in the middle of the afternoon, to be honest.
Yes.
I love the breakouts between, I don't know, 11 a.m. and 2:30, 3 o'clock, maybe even 3. Yeah, going into 3 o'clock in the last hour, the market's better. The market's hopefully going in the same direction. That is ideal. I hate playing a gap up. If it's a gap down, then you just got to kind of wait and see towards the end of the day. So my focus is mainly on what the alerts are telling me. And if I get an alert at 2:30 and it's ready to rumble, I'm going. So I don't really keep track of kind of the time of day I ended up in a position. But I know there's a lot of back testing behind it.
I think too, and both of these men alluded to it. Narrow your list down and focus. I'll say it again. Focus on the absolute best, the charts that are clean and simple, that everybody can see. It's not some secret hocus pocus pattern. Everybody sees it. That increases the potential that they will buy also. And that's what we want. And both men alluded to this. I'll be real specific. This is a great tactic. When a stock is approaching the pivot, doesn't need to be hitting it. If it's starting to approach the pivot price, take it down from the daily chart, look at the hourly or 30-minute chart. Look for a volume surge as it's approaching that pivot. That increases the potential that it will go. Why? The volume's telling you other people see what you see. Doesn't that increase the possibility that they will buy too? And that's what we want. And it's measured in a combination of price, with that volume surge. And you don't need to look at the daily. Take it down to the hourly or 30 minutes. See if that volume's coming in. And if it's not, don't buy it. Don't buy it. We need other people buying besides just us. That's important to remember. Those are great answers from both of those men, though. That's good. And don't think you got to be doing things all the time either. Both of them said that. Just do the clean and simple and forget everything else. You'll be better for it.
You get in trouble trying to mix varying styles and all of these other things that you can add into your trading game and an element, and you'll probably try them all to figure out what works best for you. And then when you do, you'll never leave that home, whatever that position is. You'll stay within those lanes.
You own it.
That's especially prevalent in this market where we are sitting on hands and we are waiting. And so there's a lot of searching and looking. I get the emails, I see it, people are looking for other things to trade and how can I do this and how can I do that? And it can mess you up.
Oh yeah. I mess you up is right. And turn off the noise. I mean, you start looking for things and you start making it up that maybe and it has a negative impact on your thought processes. It has a negative impact on your clarity of what you're looking for. And then pretty soon you've lost your way.
Mm-hmm.
And I will synopsize a lot of it and say this. If you can just focus, if you can just say, I'm going to look for clean and simple base breakouts. I'm pointing this one out. I could show you 100 more if you want. Clean and simple base breakouts in a good market that everybody can see. And there's a volume surge. When it's pushing through the pivot, go with it in a good market and have the discipline. And all these men are saying it, all of them. Have the discipline to wait for it. I said this again at the meetups for years. Just because the market's open for business doesn't mean you have to do business. Wait for your setups and do those. And don't play the compare game. You'll be better for it. I promise. Run your race.
It's so true. It is unbelievable until you remove yourself from the market how much better, honestly, by nature, your P&L comes out to be. Less time in the market, less mistakes. If you're maybe still trying to figure everything out, by sitting on the sidelines, especially in a crappy market and just watching, and then when things turn, being on the right side of a position,
Mm-hmm.
you only need a handful of those positions a year to make multiple years.
Yeah.
That is the nature and the beauty of waiting.
You got it.
There's a certain serenity to it, isn't there, Matt?
There is.
Yeah.
There absolutely is. Because, it's not that when you're sitting outside and waiting, it's not that you're just falling asleep at the wheel, so to speak. You're building your energy in training your eyes for a position that could really change things. You're still active, but you're just kicked back in the charge mode.
Yeah.
You're just waiting for the right opportunity, and nobody likes being whipsawed. Nobody likes any of that emotional capital churn. Just sit and wait, and then when you have a handful of winning trades that can really skew your portfolio, that's all you need. It's just a
never
handful.
look
You gotta sharpen your skills. You don't just sit there and be like, okay, I'm gonna wait. So let me just not do anything. You gotta.
And coming into it, you
Right.
need to ease back into it after, if you decided to take that time off.
Well, I
It's
don't
not
mean
like
by not do anything by not, I mean, you need to study the charts and such. Don't walk away from it and be like, okay, I'm not doing anything. I'm not even going to look at this stuff. When should I come back? In a couple months? No. I mean, that's kind of what's good with a mentorship program like this is Pat kind of helps guide you with that, and teach you the patience. If you like, a lot of VIP members might join and might be wondering, why hasn't Pat done anything today? Or why hasn't Pat done anything in a couple of days? Well, It's because he's already, to that point where he has that patience and he can really wait and see what is going to be that point where you should jump in instead of just trying to force yourself to jump in every single day or every trade.
This can tie in with what you're saying, Rich. I'll tell you, folks, and I've said this at the meetups for years. What you're looking at right here can turn into a video slot machine. I'm not kidding. Oh God, look at this. Oh, look at that. Oh, look. And this also. Then you combine it with the stuff on social media. Oh God, they're doing that. Maybe I should do that too. I don't quite understand it, but I guess I'll do it. It will screw your head up, and you can say, "How can you say that so definitively?" Because it happened to me. It happened to me, and I finally said, "I got to turn all this stuff off." This is why I was just posting this chart as they were talking. Clean and simple base breakouts. Look at this Tesla. This is back from 2019. Everybody saw that base. Everybody voted. You could say, how can you say that? Look at the volume surge on this bar. On this bar, the stock did 6.5 million shares. On the trigger bar, did 18 million shares, almost triple. And look at the trend up the 8 period. This is the stuff that changes your lives right here. That's serious money. You do that and forget all the other stuff, like tied in with Matt said and all of you. It just makes a business. And team, I'm going to tell you something. On the Bible, I wish somebody would have said these things to me years ago, but there was no internet. In fact, for those that don't know, I used to draw my charts by hand because I couldn't find a chart service at the time. Also, when I finally find one, I got my chart books mailed to me. That's all I had. And that was the only chart I had for the week. There you go.
What you were talking about is like you turn off everything and such. That's basically the fear of missing out, right? What you're referring to, which the first word is fear. That should be the the whole flag on there. It's a fear. So if you turn off, stop watching so many different things and stop trying to jump into every single position or worry about, oh my God, I can't believe I didn't get that. You just move on into the next opportunity.
And Rich, what a nerve you just hit there, where you're comparing yourself to other people. You're right on. It'll mess your head up. It honest to God will. I know I've been there. God, why didn't I do that with them? Gee whiz. Focus on what we're trying to teach is a few simple concepts, chart patterns that work.
A few simple concepts that you can start to use to build your trading plan.
Amen.
I think we'd all agree that the secret to getting started and having a good path to run on is to have a good trading plan. And that's something that you build over time.
Mm-hmm.
And we can, we help you do that.
Yeah. And focus, I'll say this again, focus on simple chart patterns that everybody a sixth grader could see it. It increases the probabilities, the possibilities that they see it and they will buy also. And isn't that what we want? Other people seeing it and buying too? We can't push an input price, but you get a bunch together and you can. And how's it confirmed? That volume surge combined with good price action and focus on stocks. I just need to say this. Focus on stocks in leading groups that last quarter's earnings were up 40% or higher, or average sales for 2 quarters were 40% or higher, and focus on stocks with an accumulation distribution of A or B and a composite rating of 90 or higher, and it's within 20% of 52-week highs. If you do that, and folks, I was invited by them to be in the beta test group for the original MarketSmith product. So yeah, we know how to move around in it, okay? You focus on those constraints and turn off the noise, and it's what we teach in Mission Winners. It all of a sudden starts gelling, and it gels a lot faster because you don't have all the trial and error. And you've got people like Cy, and you've got people like Matt in there, and Rich and Owen guiding also to help and answer questions. So that's all I know is this. I wish I would have had something like this, somebody talking to me during the day when I started this back in late 80s, early 90s. but there was no internet.
We got to learn the hard way.
Yeah, no doubt. I mean, we just invented fire in my science class, for crap's sakes. But anyway,
I have a quick question from a VIP for you, Pat. How do you know when a stock should no longer be on the key list? An example of criteria would be nice.
Good question. When the price and volume, I'll rephrase it or state it again for everybody. Pat, how do you know why do you take a stock off the key list? What do you see in there? And it's really quite simple.
Did you have
The
one
price
today?
There you go.
You removed.
Probably. I don't know which one it would be, but yeah, the price and volume action wasn't conducive to buying. It was dropping. It was dropping in price on heavy volume, or it was going up on no volume at all, or it just wasn't moving at all. It was dead. And if that happens, I love to take it off the list. I'm really big, and all of you know this, and this is for everybody listening. We start out of a key list between maybe 15 to 25 stocks. And during the day, we're always taking stocks off that list that no longer fit our parameters. That improves our focus on what remains. I'd rather know 10 stocks really well than own 20 or 25 stocks just so-so. So we're always pruning it down as the day progresses, which helps us make better decisions. Like I said, I'd rather know 10 stocks really well than 20 just so-so. And we don't make a huge key list.
I think, Danny, what basically is, if you're not feeling the stock, if it's just not doing anything for you, if you can look at the chart and be like, okay, this isn't going anywhere, that's when you're going to remove it. That's when Pat's going to remove it, right? I mean,
at least for the day, right?
Yeah.
I mean, at least for the day, it is not going to add any value in keeping it there and staring at it. So you might as well reduce the number of stocks you're watching for trading during the trading hours, and then when Pat does this key list again, maybe the same stock may show up 3 days later.
Yep.
Yeah.
When it's back near the pivot, right? So that's the idea of trimming down. You could actually do. You don't have to wait for Pat to do that. I mean, once you have the key list, Pat had 20 of them, and you brought it down to 12, and that's what you're watching. And then 3 of them are dropping down. Market opens, they're just falling down, or no volume is seen after 1 hour, 1.5 hours. And they are far away from the entry price. Just take them off.
That's it. Less is better. It's a good, great points. Yeah. And I'm pushing it clean and simple.
Go ahead, Pat.
Oh no, that's all. That's all.
I just wanted to state, it was a couple of days ago, we were in a live Discord session during the chart analysis, and one of the members, one of our VIPs, asked you to look at a chart that just didn't make the key list, and he wanted to know, what you thought about it. And you said, well, I was looking at this, but this is why I decided not to. But it did look good to me. The chart would look clean, but you were looking at, from years of experience, and you're looking at all the fundamentals. And as soon as you said, yeah, you got to be cautious with this, the stock just plummeted and fell out. It was like it was just the timing. It was like I was like, that's why those trained eyes see more than even sometimes Pat, like an example of criteria, what Danny was asking for. Sometimes it's just that so much experience behind looking at the chart that you have to train yourself.
Yeah. And there ain't no substitute for seat time.
Yeah.
No.
Just looking at the charts and it's, people said, well, how long does it take you to make the key list? About 30 years. And that's not cute. 30 years of looking at charts. And again, it wasn't a hobby. I had to do it. That was the sole source of income, was our investing profits. There was nothing else. And so it was, you had to make it happen. But it's fun. What's really great, folks? It's like, wow, it's really good to make money. Yeah, that's good. But it's also, to me, psychologically rewarding to say, I'm going to take these constraints and I'm going to look for some things that I see, but hopefully other people see too. And it just goes. And that's it's maybe people say, oh, that's kind of a head game. That's good for the ego. It's kind of neat when it works, you know, and when
Yeah.
it
You've
doesn't,
likened it to, you and I have talked, and you've likened it to a treasure hunt. You know, it's fun. It's a treasure hunt to find that one that's going to move.
And you
it
and
is.
you share.
It's a treasure hunt. It's digging in a lot of different holes, and you say, yeah, this is I'm going to strike gold with this animal, you know, and you know, I kind of get excited about this if you couldn't tell, and I haven't had any caffeine in a while. No, the idea that it's so neat to look and look and look, and you find one and you say, yeah, this looks pretty good, and it works. It works. They all don't work, but when they work, it's psychologically financially, yes, but it's also psychologically satisfying. But I need to share this with you. We can never get like arrogant, like we're so great. No, that's a dangerous deal. The market's bigger than all of us combined. Okay. We just get in line with what is, and that'll help us. And ride trends for as long as you can. Sell some into strength to guarantee a profit, which also relieves psychological stress of, God, it might drop. I need to sell. You've sold some, you're going to make money no matter what happens. And then you can just let it work. And what's beautiful also is when you have a stock that's working and you take it off your front page. You have an alert set on it, but you don't even look at it. I've had stocks, I don't even look at them. I look at it once a day. What's it doing? No alert goes off. I don't need to look at it anymore. Done. And that's just riding trends. So anyway.
I've seen some VIPs get rather excited by making their own watch list, you know, after being a VIP for a while, and then looking at the key list later and seeing that their stocks they picked were ones that you picked on the key list. They got rather happy about that.
That's
you know,
cool.
it's talking about the treasure hunt, the feeling and everything about getting that just pride almost like, yeah, I think I'm starting to do stuff right.
Yep. It is such, it is. It's not an ego thing, but it is. It's psychologically satisfying. And you know, I'm posting charts as you all are talking too, and I'm not doing it to be arrogant or irritating, excuse me. But you know, I'm posting this one. Buy and hold. Unless you got a ton of money, be really careful. It's like, oh, advanced micro device. This was written up in Investors Daily. It's like, oh, this is pretty good. How'd you like to be the person that bought that at 150 and took it all the way down to 70? Well, you lost half your money. Half your money. Hey, folks, it's easy to lose half your money. It's dang tough to get a double. But I'm going to post this here to show you. Clean and simple base breakouts. This happened last year when I was in Colorado. Breakout here and here. Just simple. 2 buys. And you know, your average cost will say 112. It goes up. You didn't sell at the top at 162, but you sell up near 150. That's good money. Most people like to make that kind of money percentage-wise in a year. And you did it in 1, 2, 3, 4, 5, 6 weeks, and you're done. That's it. And by the way, I can quantify it if you want. This stock was in a leading group and had great earnings and our great sales when it was on the key list. That's a fact. There you go. And look at it. A 6th grader could do this. Could look at that and draw it. Say, oh, that's what we're looking for. It is. It's fun. By the way, you can say, where'd you get the phrase treasure hunt? From David Ryan. Said that it was a treasure hunt. And which also leads to another point. I need to bring this up for everybody. I encourage you to read Bill O'Neill's book and study it. I think Mark Minervini's book is a wonderful book too. I've got that. He actually reached out to me and I did a review on another one of his books. Good book, very successful. I'll tell you what, another book that I would recommend, and there's a lot of them. Trading for a Living from Dr. Alexander Elder is a wonderful book. A great book also, Market Wizards from Jack Schwager. The first book, they're all good, but the first book is wonderful, especially the interview with Dr. Van Tharp, who I met years ago. He passed away. Met years ago. Great book. Okay. Market Wizards by Jack Schwager. Read that book, study it, and read and study the last chapter. It'll change your life. And by the way, know this, I don't get any kickbacks from any of these people. Okay. I'm just telling you, it's great stuff. I needed to interject that. Sorry.
Speaking about Market Wizards, John Norse said Team Killer webinar as usual. He has to take off. Appreciate all the time everyone invests. Still interested in Tea Time with Pat. Stories of a market wizard. So I guess we're gonna have to do one of those soon.
Hey, we could do that. Yeah, I'm not going to say I'm some kind of a market wizard, but through the years, I'm thankful. I'm very thankful.
We're
I'll
at
just say that.
time now, though. We're at 9:30, and that's kind of when we're scheduled to go out. So if Sire
Oh,
Matt,
man,
you
I
have
gotta-
anything to say? Or go ahead, Pat. Sorry.
Oh, I got to check in with my parole officer.
Yeah.
Just kidding. I'm just kidding. Go ahead, Matt. Take it away, buddy.
Oh, no, I don't have anything else. I think it was a great webinar as usual. I think everybody's got some great points to add in. So as usual, thanks everybody for joining in on us tonight. My Twitter is always available if anybody has any questions. The chat for the mission winners is always there. Reach out to any of us. Thanks again, guys, for having us. It's been great.
Thank you, Matt. Thanks for coming on. Thanks for always being willing to share. And Sai, you too.
Yeah.
Appreciate it. Thank you very much. Always love to hear your perspective.
Yes. These
Thank you, sir.
these two men are sharp. I should take that a step further. There's a lot of sharp people that aren't successful. They're successful. They're making money. They're consistently making money. There's a big difference. I know some extremely intelligent people, but they're not good at investing. These guys are, and they're willing to share their knowledge and their experience. So yeah, as Owen said, I thank both of you for being VIPs. I thank both of you for contributing. You're helping a lot of people. So I thank you very much from my heart. I appreciate it. And Rich and Owen, I also thank you too, both of you, because Mission Winners wouldn't exist without you. And team, I also share this, and this is for everybody. I thank you for your time. Years ago, I had a professor talked about the different things that he was really challenging, things that you can steal. And he said, here's something, can you steal somebody's time? We try to make these webinars worth your time. We don't want to steal your time. So that's why we pour our hearts into it, is to hit it and hit it hard. So I thank all of you for your time. And I hope that it was worth your time. That's to me the goal. So, and Owen and Rich, without you two, none of this would happen. So I thank you too.
Thanks, Pat. Thanks, gentlemen.
Alrighty.
Thanks
You,
for
everyone.
Thank you, guys.
It was a wonderful seminar. Thank you, Pat.
Thank you
Again,
guys for
have a good
tuning
night.
in from YouTube. Make sure you hit that subscribe button, and we'll be doing another webinar again soon. See you guys later.
Let's do it. Let's make some money. Thank you.
Have a good
Have a nice
evening, guys.
weekend. Bye.
Take care.